I wanted to do this weekly update on the computer. Wealthsimple's having some problems. I cannot do that. I have to upload it from my phone. This is part of the new scheduled Friday updates. I will be taking a look at how my portfolio is at the end of every week, every trading week. So, as you can see, I spent a little bit of money. I used to have 7,800. Now I have 6,000. Some 100, 600. And if we look at our activity, we can see that I bought 15 shares of XEQT. I bought a few shares of Intel, 6 shares, bringing myself up to, I believe, 40 shares. I bought some Dream Industrial Real Estate, 25 shares, and I bought some Nexus REITs, which is 30 more shares. So, with those in mind, we will continue to look at the performance of my portfolio. Let's go to invest, and we will take a look at the total price. So total value is Apple and down almost 4%. That I am leaving for now. Algonquin Power has a high P. I would like to put a little bit more in, but I'm going to wait at least a little more till I see like a definitive pivot, especially with the federal government. And especially with a company that has higher debt than I would like to admit. They're coming off of a share price that was very high. So we are going to hold off on Algonquin. It's not that much, $800. So I'm not too worried. Alibaba, though, has reamed me out almost as much as Meta, which we will get to. And Alibaba, I did buy a few more shares. It is back to $75. I do believe that my average is 115. So yeah, taking a bit of a beating on Alibaba. I do believe in the company still and their numbers. I really do believe it's just a problem of a recession in China, and it's a company that I will continue to hold. Berkshire Hathaway B shares, something that I bought fairly recently, something that's been doing quite okay. This is a part of my 50% into ETFs. So right now we're looking at 12% of my portfolio, 12.5%. I did buy more XEQT today. So I did buy a bit more XEQT, but not BRKB. So I would like to probably pick up a few more shares of Berkshire Hathaway B shares sometime in the near future, but we're leaving that for now. Caterpillar, one that I was sleeping on, actually. It did reach 164. And I was going to pick some up. I told myself I would. I set a timer for 160, I think 5 round number, and I missed it. I didn't take a look at my phone, and that is okay by my standards. They have a PE of 14, 2.47% yield. It's something that, I don't have very much in Caterpillar, but I would like to own a bit more Caterpillar. So we're going to keep my one tracker stock share, and we're going to relax and maybe fall asleep on another Caterpillar share drop. Hopefully not this time. Dream Industrial Real Estate, I have 125 shares now. God damn. I have $1,500 invested, and I am 15.97, so 16% down. Unfortunate. I did average down today. This was a big red day, and this is a company that is selling for almost book value. So their dividend, their yield has gone up to 6.5. I think that's a very manageable yield, although I do see them maybe decreasing dividends. Not saying they will. And I was holding off for $10. I think I just jumped in a little early at 10.55 today, actually. So yeah, I'm not too worried about that. I'm not trying to catch a bottom here, but I am trying to average down. And right now they are reaching quite a low spot as opposed to the last drop from the pandemic. And they are a dividend stock with long-term REITs that I will be holding into the future. So again, Dream Industrial, we put a bit more money in. Dollarama stock up 49%. Unfortunately, again, it's too high for me to want to throw a bunch of money at it, but at the same time, it doesn't look like it's slowing down. So unfortunately, I think when it comes to value investing, I may have just missed the boat on Dollarama, so we'll just wait till that comes back, or there's a bit of a mean just until the stock reverses. It is they are doing multiple share buybacks, so that's been propping up the stock price quite extensively, and therefore I haven't been buying. Empire REITs actually took a bit of a dip, quite a bit of a dip actually. Am I almost in the negatives? I am finally in the negatives on this. This is one that was a winner for me for a very long time, and I probably won't put any more money in for a little bit. By the time this reaches a low, I bet that there will be other deals that I might be more interested in. I will keep it. I will hold on to the stock. It does pay a dividend, and it is something that I want to keep around. It's just something that I haven't been necessarily looking at to add more. But, maybe I should be. That's Empire REITs. Google down 22%. Oof, ugly. Ugly. This is another one. I believe I would like to buy it at 85. So if you could just drop 10 more percent there, Google, thank you very much. No, I'm waiting. I'm waiting on this one. I already have quite a bit of money in, and I do not mind putting more money in, but I'd like to see that hit about negative 30% in order for me to do so. Maybe I'm going to miss out on a dip. Maybe not. It doesn't really matter. I have quite a bit in the company, so I'm not too worried. It's 12% of my portfolio, and I'm excited that it is. Home Depot down 13%. This is another one that I'm putting in the same kind of spot as Caterpillar. So, 17 PE. I don't see 30 new Home Depots opening every minute. I am a rigid tool user. I am a skilled tradesman, and I love my rigid tools. Love orange. It's my favorite color. Well, it's not my favorite color, but that is a lie. It's something that I'm going to keep, something that I'll hold on to, and something that I am not looking to add into unless it starts to scream at me. Hopefully, I am paying attention, unlike Caterpillar. Next up, Intel. Ooh, God, minus 28%, something that I've been buying quite consistently. I have 50 shares, so I am down $500. Again, that's a 5-year hold for me. They do have lots of ambition, but it's going to take a while for that to show itself. I do believe, that they should decrease their dividend payments. They're paying 5.46. That is coming not only out of profits, but I do believe that they're diluting us now. And, even saying that, I don't really believe the company is bad, as a 5-year turnaround. If, it starts to look real doubtful around year 4, I might have to reconsider. But right now, we're putting a bit more faith in them than, by all rights, we probably should, So this is a bit of a conviction play. Not a bit of a conviction play. It definitely is a conviction play, but it's my conviction play. So we're going to stick to it, stick to my guns. Meta. Exactly the same as Intel. God damn, this company's bleeding money. Absolutely bleeding money. It's something that, until they can figure out the whole metaverse thing, until they can figure out the metaverse, and until they can stop bleeding money, I would really love for them just to pull a 180 and say, hey, we're going back to being an ad revenue company. Then goddamn, sign me up. I will throw a bit more money at them for sure. But until that happens, they are just a bit of a vampire on the portfolio. So I'm only down 40%, but it is looking doubtful, and it's looking a little more hopeless each day. So Meta, I'm not going to touch them because they have a large free cash float, but I'm not going to add to it, unless it becomes a sweet if drop to like $70 for no reason. Maybe then. Manulife Financial, another stock that has had a huge drop, but it kind of hovers around. Oh God, it went down to $13. It does hover around the same sort of area, and right now it's on the lower end, so maybe it is worth picking up a few more shares right now. Maybe I'll wait just a little more. I am being a bit more on the greedy side, but I'd like to pick it up on the lowest end, which would be about $20. So sub $20, I am for sure buying Manulife, and I won't sleep on this one. I've been looking forward to buying it, and I did buy it a little bit before, which I guess around $22, but 23.25, so yeah, maybe a little high. I'd like to be on the average on this one, especially because of how much they pay. Microsoft. Jesus, I could not find myself there. Microsoft is a company who everyone has been preaching is great, but right now, a lowering tide lowers all boats, opposite. I think that's how that saying goes. Anyways, it's minus 20%, which means that it might be coming into a buy area, but I do have a mark for 180. And at 180, it will have a PE of like, I believe 20. So I think right now, maybe just a little frothy, but obviously a better deal than most things in this market. So we will keep an eye on Microsoft, our big tech names, Again, I still have one share, which is not a lot of the portfolio, but it's something that I can see myself adding to. New Tech, 40% down. They just pay too much dividends. I'm reinvesting the dividends they pay me, but just the fact of the matter is they are paying out too much in dividends. I think it's 20% right now. So, God, that's going to get cut soon. That's going to get cut in a real big way. I'd love to see them start purchasing shares back, which just has not happened in this company's history. So, right now, again, a bit of a vampire, and stop paying me, guys. Goddamn. Start working on yourself. 106 shares, NXR REIT, a company that I bought recently. It has reverted to its upper mean price of 8.5, and $7-8. It kind of hovered around $8 for a long time, but right now it has quite a big yield. I believe when it was hovering around 8 last time, it had a yield of about 6%. So right now it's already at 7%, and it's at 8.5. So I did see myself, they're probably going to be worth a bit more than 8.5. I'm hoping around $9, which would bring the yield down a bit, and that would make it more reasonable. So I do believe that the company here that was at a consistent 8% will be at a consistent $8, will be at a consistent $9, given the fact that they have made a few acquisitions lately. Not lately, but within the past few years. Nexus Industrial REITs, just another one to add along with Dream Industrial. A dividend play, if you will. SRU, Smart Center REITs. I've been trying to get out of this company, and then now I just kind of don't care about it. I have 6 shares, and again, this is one that I more or less have forgot about, but I just kind of leave it there because it's not really bugging me, having a bunch of companies, even if it is one share. I'm kind of used to just having a bunch of stuff around, just a bunch of stuff lying around. This is like that thing in your closet that you forgot about. Like my guitar, it's there. It's got a little dust on it. We'll leave it alone. Vanguard, dividend appreciation. Again, with the fall of XEQT, this one has fallen as well. It is a dividend, but I'm not too sure about keeping it. It does appreciate. It does have a lot of companies that do appreciate, and it's got a PE of 18.8, so it is relatively cheap, I guess. Not really. So we're going to hold on to the Vanguard Dividend Appreciation ETF. It's just going to be a little piece of ETFs that I'm holding for the long term, you know, and something that will be paying me 2.07%, not a lot, but that is, if its name stake continues, that it will appreciate the dividends and payments that it gives me. So a slight edge on that. I'm being paid, but it's okay. I would like to convert VIG to XEQT, but honestly, again, it's not hurting me, so I will leave it. Walmart, something that I've been buying. I did buy earlier this year. I hope to see it at 120 again, honestly. And by then it will have a PE of 23 like it had last time. Something like that. Anyways, I've been buying Walmart. I bought it like 120. So every time I see like a substantial dip, I didn't buy it at 118 though. But I got to keep my eyes open again. I've been kind of slapping. Been working lots. You know, I am a worker first. I'm not an investor, so been working lots, and I slept on Walmart. But I do believe that Walmart will be coming back to reality a little bit, hopefully with a PE of around, 15, if that is even what it deserves, which would require the price to fall, not in half. It might fall in half. But I don't see Walmart going out of business. I see them being a strong contender later, especially, they don't exactly rack up debt, but they are not doing as crazy as they once were before inflation. So we'll see how Walmart handles that, and we'll see. We'll just keep up on Walmart. And XEQT, which is something that, I did take a little break from buying because I did buy a bunch of, how would you say, what do you call that? Goddamn Berkshire Hathaway B share. So with Berkshire Hathaway B shares, 12%, that brings me up to 40%, about 42% in my ETFs, which is not exactly 50, but we are working on that. Unfortunately, the ETFs, well, actually, they haven't fallen as much as my regular stocks, but they also don't pay that much. Not quite as much as my others. They've fallen about the same. So, for what it's worth, I should be putting more into my ETFs. So, there you go. That's the plan, and I'm just keeping my eyes open and see what deals keep arising, because deals do keep arising because we are going through a bit of a rough time. Anyways, guys, thanks for watching. If you even made it this far, I don't think any of you made it this far. If you did make it this far, why don't you comment? Send me a comment, say hi. I love chatting with people. Obviously, I had a huge conversation. Anytime somebody is willing to have a conversation about these stocks, I love it. I like to. It's hard to explain myself in so few words, and it's hard to keep these videos less than 2 hours. So, anyways, guys, thank you very much, and I'll see you next time. Bye now.